This is the Asia Trade. I'm Haslinda. Amin in Singapore.
I'm Haidi, Stroud-Watts in Sydney. The top stories this hour.
We'll be putting a tariff on of approximately 100% on chips and semiconductors. But if you're building in the United States of America, there's no charge.
President Trump declaring a 100% tariff on imported semiconductors with exemptions for locally based production. Apple announcing a $100 billion investment plan to bring more of its manufacturing to the U.S. But Asian tech stocks set to come under pressure over the chip tariff as some U.S. semiconductor names slip in extended trade. Plus, President Trump also doubling India's tariff rate to 50% over its Russian energy buying, escalating the fight with a key Asian partner.
Well, for markets, new headlines to mull over that 100% tariffs on semiconductors. Also, India getting slapped with an additional 25%. But when you take a look at the markets, risk appetite remains intact. The S&P inching higher, still close to record highs. Of course, investors turning their attention from easing data in the U.S. to perhaps the earnings season. S&P companies posting strong earnings, 9% higher for the quarter, enough to boost sentiment. Of course, we had Goldman saying that perhaps, you have to go with the momentum, but investors run the risk of ignoring recession concerns. Taking a look at where we are in terms of S&P futures, up by about 0.2%. We're keeping an eye on oil, of course. President Trump set to meet with Zelenskiy as well as Putin to talk about over the war between the two sides. Heidi.
So much going on, has a lot sort of in contention when it comes to what investors should be focusing on. But take a look at the setup as we get into the start of trading here in Asia. Japan had a couple of days of a rally, but of course we're also getting into the peak of earnings season for that market. So there is quite a bit of sort of caution and tendency to remain on the sidelines. We are seeing both Nikkei futures as well as Sydney futures trading to the downside at the moment. Looking at dollar yen, the dollar is seeing a little bit of weakness there. And of course, the question is whether we should be perhaps seeing more weakness in the US dollar given just the gyrations when it comes to President Trump's policy right now.
That's right, and expectations of those rate cuts. Heidi, let's get more on President Trump's latest tariff bombshell. A 100% tax on chips imported into the U.S., but with exemptions for commitments to produce locally.
We'll be putting a tariff on of approximately 100% on chips and semiconductors. But if you're building in the United States of America, there's no charge, even though you're building and you're not producing yet in terms of the big numbers of jobs and all of the things that you're building. If you're building, there will be no charge.
Let's get more with Bloomberg senior editor Derek Wallbank and our Asia-Pacific economy reporter Swati Pandey. Also joining us from San Francisco is our senior tech editor Nick Turner. Derek, let's start with you. 100% tax on semiconductors. We have been waiting for the number, and the number came in really big.
It did, and look, here in Washington, that's a massive number. 100% tariff for semiconductors and chips was the signal from President Donald Trump. Could be announced sometime next week. But at the same point, Trump offered a sort of get-out-of-jail-free card for a lot of tech firms, signaling out Apple as an example of how you might get down to 0%. Apple CEO Tim Cook was at the Oval Office. He was announcing an additional $100 billion investment in the United States, some additional manufacturing in Kentucky related to the glass that's on iPhone screens and things like that would be part of that. And Trump, he has wanted Apple to move all of its iPhone supply chain for things that are coming into the United States to the U.S. A lot of that is done in India, which has a 50% tariff threat. And if you look sort of across the Apple supply chain, you see a lot of Trump's tariff threats. I mentioned 50% India. A lot of other products are done in Vietnam. That has a 20% tariff that's supposed to hit. You have these sectoral tariffs that we mentioned, but Trump's sitting there on this key chip semiconductor tariff saying, look, here is an example if you are bringing production back in. Now, that doesn't necessarily mean that Apple is bringing everything in. There's a good amount amount of that, including final assembly, that's likely to stay out of the U.S. For a while, if not indefinitely. But the president's seemingly satisfied with what Apple does. Now, I have to mention here, there are a small army of unanswered questions. We don't have a detail on what this tariff is exactly going to look like, the exact number. He said around 100%, nor do we have a great idea of how the physical process is going to be to qualify for these exemptions, but Trump very clearly signaling that they can be had.
And Nick, when it comes to Apple's commitment, of course, beautifully timed before this event, do we have an idea of what it means meaningfully, practically for the business? And we know that Apple has said that over the next 4 years they were going to spend some $500 billion anyway. Is this now $100 billion sort of cumulative? Is it part of that? What do we know in terms of details?
$500 billion, so that brings it to $600 billion. But a lot of the deals that they announced today were with existing partners, and in some cases, partners that they've had from the start of the iPhone, like Corning, which makes the glass for the iPhone. And the factory that they mentioned today in Kentucky will be producing presumably more glass for Apple. And they said that for the first time, every iPhone and Apple Watch sold around the world will have American glass. So that is a little bit of a difference, and it's going to translate to more jobs in Kentucky. But obviously, this is a supplier that they've been using for a very long time, so it's not really a sea change in terms of how they're doing things.
So it's not really a big win for Trump, is it? I mean, what he wanted was actually a full shift in production to the U.S.
Right. It's definitely not that. And Tim Cook himself said that it would take a while, I think, in terms of moving assembly to the U.S. And I think he sort of downplayed how important assembly was, really. If you have a lot of these important components made in the U.S., how big a deal is assembly? But obviously, there is kind of a symbolic thing about actually making the final product in the U.S., and that's not going to be happening for a while, at least, if ever.
Swati, in the meantime, things in terms of that bilateral relationship between India and the US just go from bad to worse.
That's right. The 25% additional is a huge hit for India's economy. And we heard from Reserve Bank of India Governor Malhotra yesterday when they left interest rates unchanged. They also left economic growth forecasts unchanged around 6.5%. And that largely speaks to the uncertainty. It's just too hard to predict what will happen. It's too hard to forecast, but US is India's biggest trading partner. India exports a lot of goods to the US and services to the US, and this will be a big blow for a lot of industries, including gems and jewelry, clothing, apparel. So it's definitely not good news for India. Indians have not taken it very well either. The government has still not backed down. India has said that they are being targeted unfairly and continues to buy Russian oil. But if it does lead to any sort of peace between Russia and Ukraine, then at least something good comes out of it.
Swati, you got to wonder the kind of impact these tariffs will have on the Indian economy.
Yes, exactly. And like I was saying, yesterday the Reserve Bank of India left its economic growth forecast unchanged around 6.5%. It's not extremely high for a growing, developing economy like India, but it does speak to the fact that there is a lot of uncertainty. There will be industries that will be impacted, and it is just hard to put that number on and say this is what the impact will be. It also looks like it could be a negotiating tactic on part of Trump, given the 21-day timeline. So it's not looking like policy. It's looking more like negotiating tactic. So it is possible that India is able to get that one waived off and sticks with 25 or even negotiates that lower. So it's just hard to say how this will impact the economy just yet.
And Derek, it's not just India that is in a tough spot. Switzerland as well. Its president heading home without the deal that she wants.
Yes, that's right. The Swiss president flew to Washington a bit unexpectedly to try and see if she could get enough meetings to get a change from the 39% tariff that's meant to take effect just after midnight here in Washington. She flies home with not a deal. There was a meeting with Marco Rubio, who's very senior. He's head of the State Department, the U.S.'s top diplomat, but also not one of the top trade people. That meeting apparently went fine enough, but we did not get something yet that suggests that Switzerland has found a way off of this. Now, Switzerland has a very interesting case. It's very closely connected to the United States for a lot of different reasons. It is seen as a friendly country, and it's one that I think had expected to get a deal and maybe be among the first deals. That obviously has not happened. There's a very concentrated supply issue when it comes to what are your big things that are exports from Switzerland to the United States. So it's very difficult to make meaningful concessions, and meaningful concessions do come with a significant amount of political risk. We're not seeing, though, I'm struck by Swati's answer just before about the backlash in India. You know, you would see something like this. I've talked to some of my sources in Zurich and in Mumbai about the reactions that are going in both of those countries to the U.S. moves, and it's huge in the news. It's what everyone's talking about. Here in Washington, that's not really the case. There's a lot to talk about with what the White House is doing, and the specifics on Switzerland, the specifics on India are not rising to the level that there is some massive pressure on the president that he necessarily feels. You saw it during the Oval Office event with Apple, where Trump was referring to U.S. stock market gains. He has repeatedly done that to suggest that markets are shrugging off the impacts of his tariffs, and that predictions by opponents of his tariff policy, which is his signature foreign economic policy, were misguided when they said that it was going to crater things. So the sort of pressure points, it is a much bigger story outside than it is here in Washington, and that is a really important point to stress as we're talking about who feels the pressure to try and get a deal here and what that means they're going to have to do.
Nick, amongst those feeling the pressure would be all of these leaders within the chip sector, right? We know that just hours before the Apple announcement that Jensen Huang met with the president as well. Do we know the outcome of sort of those discussions, whether it sort of comes down to the H20 chips to China, for example?
I don't know if we got a lot more insight into that issue today. I mean, as Derek mentioned, there is sort of this get out of jail free idea that as long as you're making some investment in the U.S., you aren't going to face these tariffs. In the case of NVIDIA, of course, they rely heavily on TSMC, which does have domestic plants in Arizona. So they presumably have that as sort of a bargaining chip. But you're right, there's this whole separate issue about the H20 chip and whether and when they can resume sales to China. And AMD faces the same issue with their own similar product there. And I don't think we necessarily know a lot more now than we did before, but that's still sort of hanging out there.
Yeah, so interesting, particularly in the context of these ongoing kind of talks with China on the extended truce, right? A roundup there from our Bloomberg senior editor, Derek Wallbank, our Asia-Pacific economy reporter, Swati Pandey, and our senior tech editor, Nick Turner there. And coming up in the Asia trade, we'll be continuing to unpack the potential impact of 100% US chip tariffs with Minerva Technology Futures, talking market strategy more broadly with Pepperstone, and Credit Agricole weighing in on China as investors eye that possible extension of the US trade truce. We've also got key data when it comes to July exports coming through as well. This is Bloomberg.
In addition to the American manufacturing program, we're also significantly growing our investments in AI, including expanding data center capacity in North Carolina, in Nevada, in Iowa, in Arizona, and Oregon. So we're going to keep making investments right here in America. We're going to keep hiring in America.
Well, Apple CEO Tim Cook speaking out of the White House in really what was a very carefully timed announcement in terms of that $100 billion US investment ahead of President Trump's own event. They've committed to spending that amount on top of course, the $500 billion already committed over the next 4 years on domestic manufacturing, part of the American manufacturing program to increase US production, avoid tariffs on iPhones. And we did see a very positive response from President Trump when it comes to this idea that he views this as really Apple bringing production and bringing iPhones back to America. But as, of course, we heard earlier, a lot of these connections and deals were already sort of in place with existing contractors. So let's get some more on the meaningful implications of this. Emily Benson is a head of strategy at Minerva Technology Futures. She was previously a senior advisor at the U.S. Department of Commerce, shaping U.S. supply chain resilience policies during the Biden administration. Emily, really great to have you with us. And so when we see an announcement like this, which obviously looks big and impressive from the headlines, we know that it takes it to a sort of a cumulative $600 billion intended spend by Apple in the US market. Are you impressed by it in terms of what practically, significantly it means and what it means for some of these contracts with existing partnerships?
Thank you for having me. It sounds exactly like the type of arrangement that the Trump administration has sought even since before it came in. While the 100% announcement today on semiconductor imports may seem high, the administration actually first telegraphed that idea at that rate as far back as January of this year in the Taiwan context. And I think this has been a very forward-leaning posture of the White House to try to induce companies to make exactly this sort of announcement. I would also add that this comes on the heels of a separate $500 million announcement by Apple in the MP materials context, where it is also agreeing to offtake critical minerals and rare earths at a superficial price floor. And so Apple is really doubling down on the US market in a way that very closely aligns with this new posture on economic security in the United States.
Does this put the pressure then, because President Trump obviously says this is a great example of how his trade policy, his supply chain policy is working, right? How much pressure is there on other tech names? We know that there were talks with Jensen Huang today as well to also be able to show up in the way that the president of the White House wants to see.
So rewinding a couple of weeks, we heard from the president and also Commerce Secretary Lutnick in Scotland on the sidelines of the EU-US negotiations and ultimately deal announcement that semiconductor tariffs were inbound. They were going to be announced on a short time frame. And so the administration has been teasing out the idea that if you would like to make a deal, now is a good time. I'm very curious to see what transpires at the end of this week and over the weekend heading into next week, because it's easy to foresee a scenario in which a lot of the big players come to the White House with ideas for carve-outs. And here, I think the primary push by a lot of the companies involved would be to not have this take place immediately. And that's actually something that we see that's transpiring very differently, for example, in the India context, where tariffs will enter into force tomorrow. And so there will certainly be an all-hands-on-deck effort to figure out where there's a little bit of give and take, because this will ultimately have very significant price pressure, especially for hyperscalers and data center build out.
Emily's all about bringing chip production back home. The thing is, the U.S. has offshored that production to Asia since the 1960s. It doesn't have the ability, the capacity to do it, and it takes years to build new chip fabs.
That's absolutely right, with one exception, which is sort of uncomfortable for people who don't really like the direction of travel right now with U.S. policy, is that TSMC's production facilities in Arizona are actually beating expectations. And so I do think the administration has been relatively clear-eyed about the timeline. That being said, they're willing to apply maximum pressure to the likes of TSMC in order to expedite what's already a very fast time frame. Again, I do think there will be carve-outs to extend the timeline of implementation. If you talk to a lot of industry analysts, I think the 4 to 5 to 6 year timeframe is more amenable for the industry. We also have to remember that this will directly confront one of the administration's other hallmark policies. And this was announced 2 weeks ago in the AI Action Plan. And here the White House is saying very publicly that it wants to prioritize AI build-out, it wants to double down on U.S. infrastructure, and very interestingly, it also wants to package a lot of that AI tech stack into separate bundles that it can then export abroad. It, of course, will need affordable inputs at the baseline in order to be able to export these packages. I'm very interested to see what the ultimate price impact is on that particular corner of the administration's policy.
And Emily, some say it is about quantity, it's also about quality. And when it comes to both of them, Taiwan and South Korea answer pass. What do you make of perhaps the quality and quantity that can be expected from the U.S.?
Well, I'm glad you bring up our allies and partners like in Korea, but also the European Union, because a couple of weeks ago, in the lead up to the expiration of the reciprocal tariff pause, the administration has entered into these arrangements where foreign partners seem to be under the assumption that they would only be subject to a 15% tariff rate. And that includes a lot of these sectoral products like semiconductors. So one question will actually be whether or not today's announcement induces further development onshore by those countries, or whether or not we'll have to explore further negotiations. I also will note that the United States actually does not import a lot of semiconductors directly. Most semiconductors actually enter the United States in finished goods. So these are items like iPhones or laptops. And so it'll be interesting to see how the administration starts to calculate the actual value and whether or not each finished item will be subject to that 100% tariff rate.
Emily, all of this as we hurtle towards midterms, right? And as someone who's worked within the Commerce Department and within sort of broader industrial and supply chain policy, how likely or easy would it be for some of these policies to be rolled back, particularly if you say that there are negotiated carve-outs that push the timeline out by half a decade or more?
Well, trade is not top of mind for a lot of voters. It typically comes in somewhere in the 8th to 9th place for priority voting issues. That being said, in today's Apple announcement, for example, they've entered into a bigger partnership with Corning Glass. Corning will increase its workforce related to this one deal by 50% in the state of Kentucky. So it's also possible that we do see sizable job gains in very targeted sectors. That's, of course, aside from possible job losses and others. But if we start to see some economic movement, I definitely could foresee it having some political consequences in the midterms.
Emily, we have to leave it there. Emily Benson, Head of Strategy at Minerva Technology Futures. More ahead on the Asia trade. Keep it here with us. This is Bloomberg.
As you know, we put a 50% tariff on India on oil. They're the second largest. They're very close to China in terms of the purchase of oil from Russia.
Why are you singling India out for these additional sanctions?
It's only been 8 hours. So let's see what happens over the next.
Sanctions.
You're going to see a lot more.
So this is a taste.
You're going to see a lot more. You're going to see so much secondary sanctions.
President Trump speaking at the White House, and of course, Indian assets will be in focus when trading starts later on today. You heard from Trump doubling the tariffs imposed on Indian exports to the U.S. Remember that the rupee is already trading at record lows, or rather close to record lows, on the back of traders making exit from that market on the back of a weakening economy, as well as those tariffs being imposed on the economy. Well, let's take a look at how this is all playing out in terms of the tariffs and its impact. Joining us now, William Reince, Senior Advisor at the Center for Strategic and International Studies. He previously served as U.S. Undersecretary of Commerce for Export Administration during the Clinton administration. Good to have you with us. William, I mean, what's your take? We're seeing headlines still, dropping when it comes to those tariffs. It ain't over till the fat lady sings. I mean, where are we with these tariffs?
Well, another day, another tariff. That seems to be what's happening here. And it's just one thing after another. There's so many unanswered questions that it's very hard to figure out what's going to happen. On the secondary tariffs on India, why not China? How is it going to be enforced? Is it going to be on everything, or are there going to be exceptions? There tends to be sometimes a list of exceptions that gets rolled out later on. On the semiconductor tariffs that you were just talking about a few minutes ago, same thing. Are they going? They're not going to be applied to companies that are producing here or have promised to produce here. What does that mean? How long do they have to keep their word? Are the tariffs going to be on the chips or the products that contain the chips? And if it's the product that contains the chips, is it on the full value of the product or just the value of the chip? None of these questions are answered right now. In a week, we may have some answers, but it's really the same as the deals that are on screen right now. And there's a lot of unanswered questions about those, too. And a lot of cases where the leaders of the other countries have interpreted what they agreed to somewhat differently than what our president has said. So there's just a host of things that have to be resolved. This is going to go on for a very long time.
What are the implications, William? I mean, you can only imagine. Modi must be thinking, how did a friend become a foe? And you have to also question if India's non-aligned policy might change at this point in time.
Well, yes, I think that's a very important question, whether these tariffs are coming at the expense of the broader U.S.-India relationship. Relations with India have improved a lot over the last 20 years, starting in the George W. Bush administration, mostly for geostrategic reasons, mostly, I think, as a counterweight to China. And these actions now may be sacrificing the goodwill and credibility that have been built up over a long period of time. Trump seems to be frustrated by his inability to close a negotiation with the Indian government. There were many predictions that there'd be a deal. There were many optimistic predictions about a good deal, meaning for both sides, and none of that has happened. And for those of us that watch trade negotiations, we weren't really surprised. India is a very difficult country to negotiate with. So I think the president is frustrated and is taking out his ire on the secondary sanctions issue. First with India. He implied today that China might follow, so because they actually buy more Russian oil than India does. So stay tuned for, tomorrow or the next day, more tariffs.
The counterweight element to China is a really interesting one to me, because we've seen some of these traditional security allies in the region, Japan, South Korea, the Philippines, really having to scramble to get favorable trade terms. India obviously now on the out as well, whereas Beijing seems to be kind of coasting along with the can being kicked down the road on an extended truce. What do you make of that dynamic?
Well, it's puzzling. I mean, the irony of a lot of this is that is how badly we're treating our friends. We have friends and allies in the region, Korea, Japan. We have friends there in Southeast Asia that are not the Philippines is an ally as well. And we're treating them really harshly in these things, in these agreements. And you think that if the overall policy is to maintain the U.S. presence, particularly its economic presence in the Asia-Pacific region, you want to have friends, and you want to have people that are going to side with you if conflicts come up. And right now, it seems that we're really tossing those people aside. It's very worrisome.
What do you make of the state of play when it comes to China? I mean, is it just sort of a good news story for now because it is such a strategically and competitively difficult relationship that it's kind of being put on the back burner, and the fact that these extensions are probably likely to happen suggests that this is a way to kind of make it a good news story?
Well, it's fascinating to watch that one play out. The president seems to be of two minds about China. A lot of the people he appointed to the administration are real China hawks that perceive China as an existential threat and favor, decoupling to the maximum extent possible. The president does not seem to be in that group, although he appointed all these people. He does seem to have the view that if he and Xi Jinping could just sit down together one-on-one, they could work a lot of these differences out. He tried that in his first term. It didn't work. He appears now to want to try again. I don't think it'll work any better in the second term than it did in the first. But you've seen him over the last 2 months pulling his punches with China. The nasty rhetoric about the leadership, which he's displayed with respect to other countries, has gone away. He's imposed and then removed some export controls. It's kind of a yo-yo policy. They're on, they're off. And he's not done anything on the Russian oil issue with respect to them, at least so far. I think he wants to get the meeting and doesn't want to disrupt the relationship. He's also very aware, as I'm sure you reported on, that China is the one country that has used its leverage on us, namely with critical minerals and rare earths. And they haven't hesitated to block their export. That was a wake-up call, I think, to the administration that this is one of the rare cases where Trump does not hold all the cards, and I think that forces him to proceed more cautiously.
William, we know that Trump's tariffs face a legal battle at home. Does it even matter? I mean, we know that Trump has a way of pushing through everything anyways.
Yeah, I think that's interesting to watch. My guess is that whether he wins or loses, it'll be very difficult to get rid of the tariffs, at least in the short term. If he loses, and I think this will play out over the next 4 or 5 months, it's not on a really fast track, but it's going to be faster than the normal course of litigation in the United States. I think by the end of the year, you'll get a decision out of the Supreme Court. If he loses, he'll probably say that the agreements that he's already struck are the product of the negotiations and not the product of the law that he used, so that the court's judgment about the law doesn't affect the agreements that he's negotiated. Now, he'll be sued about that. So more lawsuits, more litigation. The courts so far have tended to say, let's keep the tariffs in place while we're sorting out all these legal issues. So I think even if he loses, they're going to stay in place. And if countries are looking to the litigation as a fail-safe for them, that ultimately it'll get them off the hook, I think they're going to be disappointed.
William Ranch, Senior Advisor at CSIS. Really great to have your views for us today. More ahead on the Asia trade. This is Bloomberg.
Japan's top trade negotiator, Ryosei Akazawa, has met with U.S. Commerce Secretary Howard Lutnick, urging swift implementation of their deal to reduce tariffs on cars and auto parts. This comes after Prime Minister Shigeru Ishiba admitted getting a win-win outcome will be a challenge. Let's go to Tokyo and our East Asia government editor, John Hoskovich. John, what are the political risks for the Prime Minister around this trade deal?
Sure. We still have a lot of uncertainty about the deal, how it's going to be implemented, what will the parts be, and Prime Minister Ishiba is getting pilloried each day in Parliament by the opposition parties about the uncertainty around the deal. It hasn't been written down. This comes after an election loss for Ishiba's ruling LDP, and when Ishiba took office soon after that, he also called a step election for the more powerful lower house, which was a setback. His party, the LDP, doesn't have a majority in either body, policy, leaving him in a precarious position. This has led to speculation that his days as prime minister are numbered. So we have the political input on one side, we have the uncertainty around the trade deal on the other side, and both of these things are putting pressure on Ishiba, and with a lot of observers saying that his days are numbered. It's just a matter of whether he wants, how long he'll stay on. Ishiba has vowed to stay on. He's looking at polling which shows more dissatisfaction with the LDP than with him specifically, but things are not looking good for the Japanese prime minister.
Trump says Japan's going to start importing these Ford F-150 pickup trucks. Are we going to be seeing them take over the streets of Tokyo?
I don't think that's going to be coming anytime soon. The thing is, having a network of dealerships, parts, support for these things it takes a long time to do. American cars have the steering wheel on the other side for the most part. And just like one practical thing, the Ford F-150 is about 2 meters wide. Japanese roads, especially in urban areas, are about 4 meters wide. So if you have two F-150s passing each other on a small road in residential Tokyo, they could knock each other's mirrors off if they try to pass each other. The U.S. automakers have been trying for a long time, decades, to get into the Japanese market. Japanese have shown not a lot of liking for their offerings, the bigger cars, the SUVs. I don't think we're going to be seeing F-150s on the streets of Tokyo in great numbers anytime soon.
Bloomberg's East Asia Government Editor John Herskovitz there. Let's take a look at oil, particularly when it comes to the implications of some of these geopolitical developments. Oil really holding on to that 5-day decline. It's a 2-day trading that you're seeing at the moment, but over the past 5 days, we've seen that for investors looking really beyond these ongoing efforts by the White House to punish buyers of Russian crude. The latest, of course, being really doubling down on these tariffs over India. Well, President Trump says there's a very good chance that he will meet soon with Presidents Putin and Zelenskiy in a fresh bid to broker peace between Russia and Ukraine.
President, have Putin and Zelensky agreed to a summit yet? And where and when would that be?
Well, there's a very good prospect that they will. And we haven't determined where, but we had some very good talks with President Putin today. And there's a very good chance that we could be ending the end of that road. That road was long and continues to be long, but there's a good chance that there will be a meeting very soon.
How close do you think you are to a deal?
Excuse me?
How close do you think you are to some kind of deal?
Well, I don't want to say. I've been disappointed before.
Meanwhile, President Putin hosted U.S. Special Envoy Steve Witkoff for 3 hours of discussions in Moscow. For the latest, Bloomberg editor Michael Heath is with us now. So, Mike, are we seeing signs of progress or...?
Yeah, well, look, I mean, it's extremely early days, but I would say that this is some of the more positive signs that we've seen. And there was a sort of a famous saying by Winston Churchill that the US always ends up doing the right thing after it's tried every other option. And this almost seems to be what President Trump is embodying, that, you know, he started off by blaming Ukraine and Zelenskiy for this conflict, and obviously they're the victims, which sort of made little sense. But now this threat on India, and India is one of Russia's, the secondary tariffs on, and the oil. Oil is the lifeblood of Russia's economy. India has been getting oil, obviously, at a sort of a discount rate. But India is one of Russia's oldest friends, and this idea of India being hurt by Russia's actions, I think, has probably, as well as the economic side, it casts some diplomatic doubt there. And so the Russians just seem more amenable than I've seen before to at least meeting. You know, this talk of a meeting. Once you get to that stage, things seem to be moving a bit. So really, it comes down to whether President Trump keeps the pressure up and goes ahead with this in a couple of days to show Russia that he means business, as to whether it goes further. But the signs are actually relatively promising here.
And Mike, we know that the U.S. also considering new sanctions to do with Russia's oil fleet, oil tankers. Talk to us about that.
Yeah, sure, Haslinda. I mean, basically, Trump said that Russia's economy stinks, and it's a pretty. I mean, it's blunt, but it's very accurate. I mean, they're totally reliant on oil here, and so this secondary fleet is basically, Iran does similar. It's just a way to get around the sanctions, and the idea is to try to curb, these sales where oil is transferred from one ship to another, or other ways that they get around, the implementation of sanctions. And generally, buyers like India and China can get this oil at a discount. I mean, not necessarily. It's a little bit more complicated than that, but that's just the simplest form. But the thing is that Russia's economy is so oil dependent. I mean, it hasn't diversified. It's done very, very little there. So you threaten that lifeline of finance, and all sorts of problems happen. I mean, the elite is all their money is in oil, all this sort of thing. The economy is fueled by it. So yeah, it's significant if they can get at that. The danger is you disrupt the oil prices, you send energy prices up, and then it hurts, US drivers, etc. But at the moment, if you can do this fairly deftly, it could be really quite important.
Trump really does need a win when it comes to the multiple conflicts that he sort of promised to resolve when he took office.
Yeah, well, I mean, he certainly does, and the situation in the Middle East is very, very difficult. Obviously, the option might have been that Prime Minister Netanyahu had sort of tried to wind up Gaza after the success with Iran and the attacks there, but that's dragging on, and it really doesn't look like there's an easy exit there. So he could certainly do with it, and considering he said that he could, sort this out in a day or whatever. Yeah, and then by Easter and these sorts of things, he really could do with some progress there. But at least he's sort of understanding that, you have to see what Vladimir Putin does, not what he says. So he does seem to be getting closer to understanding how you try and get to the point where you can start to end this conflict.
Bloomberg editor Michael Heath there with the latest. And we do have much more ahead on the Asia trade. This is Bloomberg.
Welcome back to the Asia Trade. SoftBank Group reports earnings today with focus on its OpenAI partnership and founder Masayoshi Son's other big AI projects. Let's cross to our tech reporter, Minjung Lee. Minjung, profits expected. What are the details? What will drive those gains?
Yeah, so I think we could expect a couple of positive things when we see SoftBank report earnings today. Its assets, like key assets such as NVIDIA, Coupang, ByteDance, I think they could have all contributed to gains for the quarter ended June. Also, SoftBank had the sale of T-Mobile US stake worth $4.8 billion, which could have also provided an extra boost. And as you mentioned, SoftBank is investing quite a bit of money in OpenAI. So looking into the future, I think a lot of people are hoping that the OpenAI gains from investments in OpenAI could further contribute to SoftBank earnings in the future, which has also been driving up SoftBank stock these days.
The stock, though, what's the outlook?
Yeah, we just saw the stock hit a record high yesterday, so we'll see how the stock performs today. But there's a lot of expectations that I think SoftBank is increasingly being looked on as a way to play into OpenAI's gains in the future, with Masayoshi Son putting a lot of support behind OpenAI, including with its project, this $500 billion Stargate project with OpenAI. But then at the same time, there's a lot of questions surrounding the funding efforts, like how will SoftBank fund its planned $30 billion investment into OpenAI, whereas there's another round of effort needed for hundreds of billions of money that's needed for Stargate. So there would be a lot of attention around how Masa plans to fund all of these efforts. Hopefully we could see some of that addressed today during earnings.
Bloomberg tech reporter Min Jun Lee there. Well, let's get you caught up to some of the other corporate headlines that we're tracking this hour. And Cathay Pacific is doubling down on long-haul travel with an order of 14 Boeing 777 jets and options for 7 more. But shares tumbled the most in more than 5 years after first half results fell short. Passenger yields dropping over 12%. Cathay's Hong Kong Express budget unit has struggled on weaker demand for travel to Japan and Thailand. Singapore's biggest bank, DBS, reporting second quarter profit that beat expectations, buoyed by a jump in income from trading and wealth fees. CEO Tan Su Shan says nimble balance sheets moves are helping offset external pressure. Walt Disney shares fell after an earnings beat was overshadowed by a cautious full-year profit forecast. It now sees earnings increasing 18% in fiscal 2025. That's a slightly higher forecast, but short of Wall Street expectations. CEO Bob Iger says Disney will no longer report streaming subscriber numbers, calling them less meaningful. Disney also unveiled a $30 standalone ESPN app and a new bundle with Hulu.
We are building on Disney's value proposition in streaming by combining Hulu into Disney Plus to create a unified app experience featuring branded and general entertainment, news, and sports, resulting in a one-of-a-kind entertainment destination for subscribers.
McDonald's says sales picked up in the most recent quarter, suggesting that recent pop culture-focused collaborations and budget meals are paying off. Global sales at restaurants operating at least 13 months have risen 3.8%, beating Wall Street estimates. The company says it's seeing weakness in its breakfast menu, which it describes as economically sensitive.
And Haidi, checking some of the stocks to watch when trade opens in Australia, Korea and Japan shortly. Honda among them, Toyota as well. Keep an eye on Honda, which raised its annual profit forecast, citing softer U.S. import tariffs on Japanese goods. Also watch Toyota, which reports first quarter earnings later today. And of course, track chip makers in the region after President Trump announced that 100% tariffs on semiconductor imports with exemptions for companies investing in U.S. production. Keep it here with us. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens. And this, of course, we continue to contend with a number of Trump and trade-related headlines there. Of course, the exemption when it comes to Apple, pledging another $100 billion commitment to U.S. manufacturing. And President Trump, in the meantime, eyeing 100% tariff rates on semiconductors, but 0% for investors, the likes of Apple. So exempting companies moving production back to the United States. We've also seen further developments, certainly not progress when it comes to the US-India relationship, with the White House doubling the India tariff to 50% to continue to punish its view on the Russian oil buying scenario there. But take a look at what we're watching as we head into the start of trading in Japan. There are also some idiosyncratic stories happening in Japan, namely it is the thick of earnings season there. We did have 120 companies reporting yesterday, mostly after the market close, a further 251 reporting today, combining to make about a fifth of the topics in total reporting today. Some of the big names are watching, including the likes of Toyota, Sony as well throughout the course of the trading day, Kobe Steel as well as Isuzu Motors, all ones to watch, particularly to look for that sort of tariff-related and Trump trade-related implications there as well. So that's sort of the theme as we get into the start of trading in Japan. We have had some moves when it comes to the yen situation as well, right? Some of the yen strength has really been undermined given some softness in that Japan wage data, even if it doesn't necessarily change the outlook when it comes to the BOJ. Also taking a look at Sydney, we're seeing sort of broad downside when it comes to markets that are coming online at the moment, but of course the first few minutes or so not necessarily indicative of what we'll continue to see for trading in Australia. Watching South Korea at the moment as well, with some of those markets just coming online. Sydney stocks down by just about a tenth of 1% there. We're seeing the Aussie dollar just slightly on on the back foot under that 65 US cent level as we continue to watch perhaps some surprising, relative resilience in the dollar, even as we have that weakness. We heard from Lisa Cook, the Fed Reserve Governor, calling the July jobs report concerning. So a lot of that's weighing on US assets continues to be what we see with the state of the Fed and how that policy goes forward. Korean stocks at the moment up by about 0.8% when it comes to trading on the KOSPI. The Kosdaq also interestingly up by 0.3%. We will be watching some of those Asian chip makers very, very closely in the session, particularly as we get into the Taipei trading session with TSMC in focus as well. Let's get more on President Trump's plan for that 100% tax on chips imported into the US, exemptions for commitments to those to produce locally.
We'll be putting a tariff on of approximately 100% on chips and semiconductors. But if you're building in the United States of America, there's no charge, even though you're building and you're not producing yet in terms of the big numbers of jobs and all of the things that you're building. If you're building, there will be no charge.
Romy Vagis is our digital politics editor. So we obviously saw that, very specifically timed announcement from Apple as well. What's the significance of this exemption of companies that build in the US from these new chips tariffs?
This is a huge carve-out for Apple and for major players in the industry. If we take what Trump said to be actually put into plans, that means that companies that have said that they're going to build plants in the United States, they will not be subject to this 100% semiconductor rate. So that means these major players, we're talking about TSMC, Samsung, Texas Instruments, they will not get these 100% semiconductor tariffs. So yes, this is a huge exemption for these companies.
President Trump seemed quite satisfied, praising Tim Cook's plan, saying, he's not making this kind of investment anywhere in the world, not even close. Apple's coming back to America. Does that mean we're going to see an iPhone that's completely assembled in the US?
Well, I should remind all of us that earlier in the year, the president said he wanted the iPhone to be completely constructed in the United States. So he has come back from that. And these investments from Apple, even though they are substantial, they will not mean the iPhone will be fully assembled in the United States. I mean, reporters did press Tim Cook on this, and he said it will be built elsewhere for quite a while. But yes, as you say, the president is satisfied with this level of investment. It's about $600 billion from Apple in the United States.
And of course, doubling down on the tariff threat against India, it's interesting, right? Is this likely to work, given that we've spoken about some of the structural challenges India has in terms of where else it can get that crude supply?
This is a hugely disappointing outcome for India. I mean, a few months ago, the Vice President of the United States, J.D. Vance, went to India, met with Modi. It seemed like both sides were optimistic. But as of 12:01 a.m., there will be a 25% tariff. That's the country-by-country tariffs that Trump had previously announced. And then in 21 days, there will be an additional 25% tariff. And this is a penalty for India buying Russia's oil. Now, India so far has called this unreasonable, says that it's protecting its economy. But Trump is getting increasingly frustrated about the pace, the lack of progress for a truce between Russia and Ukraine. And he's singling India out for this. I mean, we do have to note that China is buying Russia's oil and is not getting this penalty. So yes, India feels it's being singled out, and Trump is trying to send a message here.
Bloomberg's digital politics editor Romy Vagis with the latest state of play when it comes to tariffs and trade. Let's bring in for the market reaction Dilin Wu, who's the research strategist at Pepperstone. The market reaction has been mostly a non-reaction, right? Be it you look at US futures, the VIX, trading the dollar, yen, gold. What do you make of this complacency when it comes to these trade and tariff headlines that continues to be met with a collective shrug from investors?
Well, I think obviously this time Trump didn't step back, and instead he is imposing a steep tariffs on several economies like India and also like other countries. And but I think the message he's delivering is quite clear. That is, for anyone who is willing to invest their capital in the U.S. or purchase goods from the U.S., there won't be tariffs. So with this kind of context, I think we're still wondering if U.S. and China will make any agreement, because the deadline of the tariff pause is ending on August 12th, and we're also trying to price in any certainty for the trade talks between U.S. and India. And before we get more clarification, I think overall the market is still quite cautious in adjusting their positions.
So how are you positioning at the moment in terms of risk versus, say, havens?
Well, I think gold is obviously my top conviction at the moment. And now I think we are entering to a phase where the traditional role of gold as a hedge is reasserting in a big way. I mean, we're under a combination of many good scenarios for gold bulls. For example, escalating tariff tensions, some potential compromise of the Federal Reserve's independence and fiscal concerns in the U.S., and also deteriorating labor market in the U.S. So in the midterm, I think gold will still likely be supported, although we face some pressure from above because of the high U.S. inflationary pressure. But I think gold is obviously something worth to keep in our portfolio at the moment.
How do you view chip and tech stocks then, given this overt threat?
Well, I think from the earnings report perspective, we saw the many tech countries like Meta's, or tech companies like Meta, Amazon, Google, and Apple all reported very good. And obviously, Apple is maybe is the bestie of Trump at the moment, because after it committed to invest as much as $500 billion into the U.S., it also add this investment by $100 billion this time, and I think it would be a good advantage from them, because obviously if I am a company in the U.S., I will shift my purchases from overseas to the U.S. to save some budget and for cost efficiency, and I think that's obviously a good news. And overall, I think in the short term we might see some consolidation in the tech firm, but in the long term, I'm still quite bullish. I'm still optimistic.
The weakness in the latest US data readings, not to mention some of the feared politicization of how President Trump wants to reshape leadership at the Fed, do you think markets have fully priced in Fed expectations and easing expectations for now?
Well, I think the market is still considering the potential impact of the U.S. tariffs, and especially with the negotiation with China. And also one other interesting thing that bring my attention is, although for the company like Japan and European Union who already made the trade deal with Trump, there's no specific deals or details to put into anything concrete. And that reminds me back to 2020 to 2021, when China once pledged to invest as much as $200 billion US dollar and to purchase US goods, but it ended up being more of a empty promise. And I mean, if US ever learned from the previous experience, then they have higher motivation to put things into more concrete details. And I think that's one of the major events that market is putting their eye on.
What opportunities or risks do you see around China-US? Because there's sort of an interesting almost lack of development when it comes to these negotiations, right? It feels pretty likely that we'll just continue to see another extension.
Well, personally speaking, I think they will still try to avoid spiraling out of control and will manage to make a deal. And because both sides hold the critical chips for each other, China with rare earths and US with semiconductors. And I think there will be a higher probability that we can see them to make a deal. And also, we're expecting the US, the China trade balance numbers to be released today. And I will put specific focus into the export exposure regions, because back to June, the Chinese custom just announced the total export to the US was decreased by as much as 1/5 in the first half of the year. And if we can see like similar kind of pivots for China to export to US, to ASEAN and the EU, I think China would definitely have more bargaining power.
Dilin Wu, who's the research strategist at Pepperstone, they're joining us. We appreciate your time. And we are watching these Asian chip stocks very closely, right, on potential moves that could see from Trump's 100% tariff. These chip-related companies, also Apple suppliers in focus after the president said he would impose that 100% tariff on imports, including semiconductors. But, of course, that exempt companies, including that example of Apple moving production back to the US. TSMC is in focus as we head into the start of trading in Taiwan later, too, with ADRs climbing after the announcement, given that they're ramping up manufacturing in the state of Arizona. We are seeing Samsung actually sort of the outlier in terms of that rally that we're seeing. SK Hynix is off by 3%. It's interesting because we have also heard from South Korea's trade minister saying that chips from these two companies, Samsung and Hynix, won't be subject to 100% tariffs by the US under that trade deal with the US. South Korea given most favored nation treatment for the sectoral tariffs on chips and pharmaceuticals, according to an interview he gave on a radio show. So if the US sets MFN tariffs of chips at 15%, that will be applied to South Korean chips. And he said, sort of gave the answer that it's correct to assume that chips from Samsung and SK will not face the 100% tariffs. But at the moment, a very much divergent picture there between Samsung and SK Hynix in the Tokyo session. Tokyo Electron, Renesas also trailing there. We're also watching the auto sector as well, not just in light of course, broader tariffs, but also Honda's numbers as well, raising the annual profit guidance despite the impact of tariff risk and broader sort of the implementation of these tariffs from the US. The annual profit forecast raised to 700 billion yen for the fiscal year ending March 2026. Softer US import tariffs on Japanese goods was really being cited. The quarterly profit coming in just short of analyst estimates. There was that 125 billion yen negative impact from tariffs in those numbers, sales falling 1% as well. The chief financial officer saying that, look, the reduction in tariffs obviously going to have a positive impact. They're now expecting sort of a gross impact of 450 billion yen from those trade levies, which is significantly under the previous forecast of 650 billion yen. More ahead on the Asia trade. This is Bloomberg.
We had some very good talks with President Putin today, and there's a very good chance that we could be ending the end of that road. That road was long and continues to be long, but there's a good chance that there will be a meeting very soon. Excuse me?
How close do you think you are to some kind of deal?
Well, I don't want to say. I've been disappointed before.
President Trump speaking earlier at the White House. Well, the effort to arrange a meeting between Presidents Trump, Putin and Zelenskiy comes after Russia hosted US Special Envoy Steve Witkoff. For the latest, our Bloomberg editor Michael Heath is with us now. So we are seeing some progress towards at least the leaders' meeting.
Yeah, which I think is fairly significant, Heidi. I mean, Trump has clearly wanted to have a meeting with President Vladimir Putin, and the Russians have been less keen. And it sort of seems that this pressure the US has sort of been building in the threat of sanctions and the implementation of the increased tariffs on India over its purchases of Russian oil might be starting to break down some of that Russian resistance. So we'll just sort of have to see how it plays out. But a meeting between Trump, Putin and Zelensky would be significant. I mean, it's not the end, perhaps not even the beginning of the end. But the fact that those three would get around a table means that something is likely to come out of that. So it's progress. But again, it really comes down to whether the US will continue to show this resolve towards Russia and maintain the pressure on it. Because if Trump then doesn't go ahead with the tariffs that he'd been threatening, Russia knows that it can throw him a bone and keep doing what it's doing, and that's the last thing you want, really.
Are the secondary sanctions, is that strategy with what we're seeing doubling down on India, is it likely to work? Well,
it's an interesting one because obviously both India and China are doing a lot of the buying. China's a much bigger beast in many respects, but Russia and India have, and this dates back to Soviet times, they have a very close relationship and an enduring one, really. And that sort of dates back to the early 70s when there was a lot of tensions with Pakistan, and the Soviets sent around warships to sort of help India out there. And so I suspect that in Moscow they're very uncomfortable about India having to pay a price for Russia's conflict in Ukraine, sort of thing there. So as well as the financial side, there's a diplomatic side there too. Russia doesn't have a lot of friends, and India is an important one. So I think Trump may have accidentally stumbled upon something that's quite sensitive there. So we'll have to see how that unfolds. But yeah, it's an interesting one for sure.
Israel may be losing a lot of international friends as well, but it does still seem to have the backing of the US.
Yeah, there's an interesting interview on Bloomberg with the Ambassador Mike Huckabee, who's there, and obviously he comes from sort of that evangelical background, which is very pro-Israel. But his signs seem to be that President Trump is sort of doesn't any longer think that Hamas is particularly serious, or the Palestinian side is particularly serious about negotiating an end to the conflict and the release of the hostages, and is sort of leaving it to Israel to do what it's got to do. Now, Israel's talking about taking control of the last 25% of Gaza, where a lot of people believe the hostages are actually being held, and they resisted from going in there because they didn't want to endanger those hostages. But now, with the thinking that political negotiations aren't going anywhere, that a military option is the way to go, again, we're always discussing this, that whether a military option can actually solve this question is really, really debatable. So, but yeah, the US seems to be taking a hands-off approach now.
Bloomberg editor Michael Heath there with the latest, particularly when it comes to these ongoing developments with Russia and Ukraine. And of course, part of that strategy has been doubling down on tariffs on India over its buying of Russian energy. President Trump is now threatening secondary tariffs of a similar nature on other countries, including China. Let's bring our China correspondent, Min Lo, in Hong Kong. The China angle is quite interesting, Rant, because that's been one of the sort of good news stories in the latest round of trade threats, because the talks over an extension are still going. Is this going to fall apart over its purchases of Russian crude?
Yeah, it really depends on what President Trump does next. But if he does impose secondary sanctions on China or tariffs on China for buying Russian oil, I think that's something that China is likely to push back hard against, because we already see, this threat floating around for a while. Chinese state-linked media Global Times had said that any such targeting of China will likely undermine the ongoing trade talk mechanism. The Foreign Ministry had also put out a statement last month saying that it opposes this sort of illicit unilateral tariffs, as well as this long-arm jurisdiction. And as Michael was saying earlier, there is the diplomatic angle and the financial angle, because China is one of the largest buyers of Russian energy. In fact, Russian crude makes up about a fifth of China's crude imports. So stopping its purchase of Russian oil is going to be very, very disruptive and costly for the Chinese economy. And of course, we're still waiting for President Trump to announce whether or not their trade truce will be extended. We're counting down to August 12th. And this is coming after that third round of trade talks in Stockholm, where we know Scott Bessent had already warned China of this potential threat, and China had responded saying it's going to defend its energy sovereignty.
Bloomberg China correspondent Min Lo there. More ahead on the Asia trade. This is Bloomberg. Take a look look at what we're seeing when it comes to European stocks at the moment, the futures trading, seeing a little bit of upside, about 0.1%. If you take a look at some of those other asset classes, including US futures, the VIX, gold, even the US dollar, very, very muted reaction to this latest round of tariffs over chips, the doubling down when it comes to tariffs over India as well. We're also seeing not much of a move when it comes to the Swissy, but despite, of course, Switzerland failing to gain any more of a favourable trade deal after that visit. European stocks continuing to kind of lose more steam more broadly, though, as earnings continues to weigh. The other thing we're watching now is really the impact of that BOE move, set to cut rates to a 2-year low. We are looking at the potential kind of limited scope for gilts to move, even if the BOE does cut. There does seem to be a perceived ability for that dovish pivot appearing to be limited. The rate cut has largely been priced in when it comes to these markets. Inflation still looks a little bit sticky there. So we'll be watching for some of the signalling with that BOE decision, and also watching to see whether we'll see sort of more downside versus a euro rather than the dollar when it comes to trading in sterling. Let's take a look at some of the corporate headlines that we're following. A Walt Disney shares fell after an earnings beat was overshadowed by a cautious full-year profit forecast. It now sees earnings increasing 18% in fiscal 2025. It is slightly higher in terms of a forecast, but short of Wall Street hopes. CEO Bob Iger says Disney will no longer report streaming subscriber numbers, calling them less meaningful. Disney also unveiled a $30 standalone ESPN app and a new bundle with Hulu.
We are building on Disney's value proposition in streaming by combining Hulu into Disney Plus to create a unified app experience featuring branded and general entertainment, news, and sports, resulting in a one-of-a-kind entertainment destination for subscribers.
McDonald's says sales picked up in the most recent quarter, suggesting that recent pop culture-focused collaborations and budget meals are paying off. Global sales at restaurants operating at least 13 months rose 3.8%. That was a beat on Wall Street estimates. But the company says it's seeing weakness in its breakfast menu, which it describes as being economically sensitive. Cathay Pacific is doubling down on long-haul travel with an order of 14 Boeing 777 jets and options for 7 more. The shares tumbled the most in more than 5 years after the first half results fell short, passenger yields dropping over 12%. Cathay's Hong Kong Express budget unit has struggled on weaker demand for travel to Japan and Thailand. Singapore's biggest bank, DBS, reporting second quarter profit that beat expectations, supported by a jump in income from trading and wealth fees. CEO Tan Su Shan says nimble balance sheet moves helped offset external pressure. More ahead here in the Asia Trade. This is Bloomberg. Take a look at how we're faring on Asian markets. And, you know, in terms of this threat of 100% tariffs on chips, we've hardly seen much of a reaction. And certainly to some of these key markets, key tech and chip-heavy markets, we're actually seeing quite a bit of upside. The Nikkei 225 up by about 0.4%. The Kospi also a bit higher. A little bit of downside and weakness here trading in Australia. But, of course, for a lot of these markets, we're in the thick of earnings season, including here in Sydney, including here over in Tokyo as well, where we're getting another 251 companies reporting, including the likes of Sony that we're watching out for today, and some automakers there as well. So there's a lot of other issues and themes that investors can be looking at other than, of course, these trade headlines. When it comes to chips in particular, it's quite fascinating that we've seen a bit of a divergence in terms of the performance in Samsung and SK Hynix. Samsung continuing to see that strength there. Hynix, they're under pressure, although off those session lows. We did hear from South Korea's trade minister saying that these two companies won't be subject to those US 100% tariffs because that trade deal with the US gives South Korea most favoured nation treatment for chips and pharmaceuticals. So we will continue to watch that, and also implications for Apple suppliers as well, given that new commitment to spending in the US by Tim Cook. Let's bring in Bloomberg Intelligence Technology Senior Analyst Masahiro Wakasugi for more. And we have heard this from Korea, and yet that sort of divergent performance for Samsung and SK Hynix. Are we expecting to see more of this type of carve-outs?
Yes, I guess that today Apple announced the American manufacturing program. So I think that some companies are contributing to the U.S. capex increase going forward. So in order to navigate the U.S. tariffs going forward, some companies could be contributing to the U.S. manufacturing increase. I think that, for example, Apple today announced the American manufacturing program, and 10 companies are joining the program, and including Samsung Electronics. And interestingly, if we look at the members, upstream companies, Global Wafers, making silicon wafers to the TSMC as well, and also back-end packaging company Amco are joining the program. So it's pretty comprehensive. So I think that in that way, some companies are trying to navigate that U.S. tariffs.
How do we read the establishment of the American manufacturing program by Apple, given that we know that it also adds to the existing $500 billion commitment that it's already made over the next 4 years?
Yes, if we look at the program, it seems like Apple should be increasing the capex by $100 billion. And interestingly, there are quite many members, including chip making equipment companies, Applied Materials, and also Samsung Electronics. And if we focus on Samsung Electronics, of course, Samsung supplies many products to Apple, so it's really important for Samsung to be the member of the AMP. And as you know, Samsung supplies also displays to Apple. So I think that its dependence on the Apple is quite significant. And also, interestingly, Apple has not talked about its assembly plan. So still talking about the chip supply chain build out in the US. So we have to know that whether Apple will assemble the iPhones or some other devices still in outside US, or maybe it seems like still it may be cheaper to make iPhones outside US rather than making iPhones, assembling iPhones in the US. So I think that in this way, by increasing the capex, many companies are trying to minimize the impact of US tariffs.
Which companies are included in the AMP then? Can they sort of meaningfully benefit from the program?
So if we look at in my coverage, Applied Materials are in the member, and they may not be directly impacted by the tariffs, but they can supply, Applied Materials supply the chip making equipment to the TSMC or Texas Instruments or Samsung Electronics, and which are building the factory in the US. And in that case, Applied Materials can be in the very good position to supply its equipment to these chip companies such as TSMC, as I said. And so Applied Materials should be in a quite interesting position. And also, as I said, Samsung has a great dependence on the Apple-related products, including the chips and also displays. So in that sense, Samsung has already some factories in Texas. So I think that Samsung can manage the situation. Maybe they can have the know-how to hire some engineers and also efficiently expand the capacity without any additional burden. So in that sense, Samsung's advantage could be quite significant.
Bloomberg's Masahiro Wakasugi there. Well, China's trade figures for July are due today, are set to offer insight into the resilience of China's export sector. Daily shipments to the US resuming after the decline after a brief rebound in June, driven by the tariff pause. Overall volumes throughout pointing to stable export growth. Joining us now is Xiaojia, who's the chief China economist at Credit Agricole. Xiaojia, really great to have you with us. And I don't sort of envy your job in terms of trying to model forecasts and expectations given the changing nature of these trade negotiations. But we've seen relative resilience in the data. Is that likely to continue?
Yeah, so I think for July, the trade growth, especially for exports, indeed is likely to be quite stable. That could be helped by the last leg to run before the U.S. reciprocal tariffs becomes effective in August. We are forecasting like around 6% export growth for China, which is quite similar to last month's reading. However, if we're looking ahead, indeed, there are more likely notable decelerations of export growth going forward, as there will be payback of those previous front-loading shipment, persistently higher tariffs as those reciprocal tariffs becomes effective, while there have been evidence that there have been a lot of support from the transshipment of the Chinese exports destined for the U.S. So overnight, the news on the renewed tariff threat from the U.S. on semiconductor and also secondary tariffs certainly add more uncertainties and greater challenges for China's export outlook going ahead.
How do you feel about the resilience when it comes to the US-China trade talks, right? There seems to be a willingness for the Trump administration to kind of push this further down the track with another extension, but we know that there's fundamental challenges for this relationship.
Right. If we look at the last round of trade talk that took place in Stockholm last week, I think there have been some positive signals sending out from that trade talk, with China signaling that there could be an extension of the current trade tariff truce with the U.S., while that would certainly need the approval by the U.S. President Trump, with now this complications of these secondary tariffs related to Russian oil and also semiconductor. I think there could be more of the work to do before we head towards 12 August deadline set for very soon. So I think this is. I think in the near term, it really depends on how much China could take concession and whether they could meet somewhere in between to manage the downside risk of their near-term trade relations that would continue to be very closely watched by us and the markets as well. In the longer term, I think if we look at the really for U.S. President Trump, he has quite used these trade tariffs quite frequently to discuss various issues that included trade, but also beyond trade, such as to include more economic agendas as well as geopolitical issues. So that would likely to be involved in the U.S.-China trade negotiations if we do have an extended deadline beyond 12th of August.
What do you make of some of the other domestic data at the moment? Of course, we know that domestically there's structural issues, right, when it comes to everything from overcapacity to the ongoing woes in the property sector. Are we seeing progress?
Well, if we look at the July data, we're still likely to display a continued moderation, softening of the Chinese economy. If we look at the domestic demand side, the consumption demand will likely remain quite weak because of the ongoing property sector correction, as well as quite a cautious business outlook going forward. So that would bring a little bit more needed in terms of China's policy easing. What we have heard from the latest rhetoric from the Politburo in end of July is that China would continue its policy easing stance, but in the near term, a lot of focus has been put on implementing existing policy easing measures, as well as targeted target measures to selected areas. Most recently, we have seen some positive signals coming out with China introducing these new fiscal subsidies to support those households for childcare, for example, and to boost newborns. I think that is some encouraging signal, and going forward, we probably see this government plan to boost consumption could be expanded and extended beyond what we have seen currently, focusing on the durable goods, for example, electronics and home appliances and auto to services sector as well.
What are the expectations in terms of how policymakers in China might be feeling at the moment, right? Is it a case of wait and see before we could see further easing from either PBOC or on the fiscal side?
Well, if we look at the latest Politburo statement, they signaled a little bit more confidence in July compared to 3 months ago about the resilience of the Chinese economy. Indeed, in first half, China's growth was holding up more recently than previously markedly expected. Going forward, I think Q3, we still see some softening of the Chinese economic growth, but not too rapidly. But into Q4, I think things will become a little bit more notable in terms of China's growth softening. When we are going to see this U.S. tariff become persistently higher for China as well as other major economies, and there could be also payback of the previous front-loading shipment. And in the meantime, if we look at a lot of China's fiscal stimulus that was announced in September last year, meaning there will be a notably higher comparison base into Q4. So we think by then the Chinese policymakers will likely to have a greater incentive to make its fiscal easing as well as monetary easing picking up this pace compared to what we are going to have in the very near term. We are going to see likely a modest step up in terms of fiscal easing in the Q4. We are also forecasting that the PBOC could still cut interest rate by 10 bips in the fourth quarter as well as a triple R cut. But beyond that, there are a lot of focus for the PBOC has also been on expanding its targeted measures through structural credit tools.
Xiaojia, always great to chat with you. Xiaojia, who's a chief China economist at Credit Agricole. We do have those China trade numbers to look ahead to in the session. More ahead on the Asia trade. This is Bloomberg. A correction on an earlier figure we reported. UOB reported lower second quarter profit that fell short of analyst estimates as lending income declined. Net profit dropped 6%. The lender says it sees full-year loan growth in the low single digits. We are also looking at Japanese autos and Honda in particular, not just, of course, the ongoing tariff risk for this particular sector, but the implications for Honda's numbers. As we saw that raise in annual profit guidance, despite the US tariff impact, it looks like it has lessened somewhat. The annual profit forecast being raised to 700 billion yen for the fiscal year ending March 2026. The company did cite softer US import tariffs on Japanese goods. So the CFO really saying that the reduction in tariff is, of course, going to have a positive impact. They're expecting that gross impact of 450 billion yen from the trade levies, down from a previous expectation of 650 billion yen. For more on Japan's auto sector, let's bring Bloomberg Intelligence senior analyst Tatsuo Yoshida. So, Tatsuo, what do you make in terms of these numbers?
Actually, the first quarter results, the results for the April-June period, that was profit was down, but that was more or less expected because of the tough exchange rate and tariffs. But stripping out one-off charges like BEV, battery electric vehicle expenses, and then also additional tariffs, the results are as high as the last year, which was a quarterly high. So I see the first quarter results essentially very, very strong. And talking about the full-year guidance, Honda upgraded the full-year guidance. I see it's still conservative, given the assumptions like currency, very tough currency assumptions they are using. And then also they are making efforts to mitigate the impact of the tariffs. And then if those things go smoothly, I think Honda upgrade the guidance again in the second quarter results or third quarter results. And then eventually they beat their own guidance at the fourth quarter. So the guidance numbers are lower than the analyst estimates, but I don't see it negative.
Are we likely to see a similar picture when it comes to Toyota, or could those numbers be a little less favorable? Toyota
earnings will be released this afternoon. I think similar to Honda, first quarter results will be profit-wise down year over year. But it's more or less expected, even though they report a lower number than the last year, market not going to surprise. We are more interested in the guidance. Are they going to upgrade or downgrade, or they keep it? My expectation is Toyota will keep the guidance, let's say operating profit at 3.8 trillion yen. Of course, their guidance given in the full-year results announcement, operating profit 3.8 trillion yen, that only includes the 2-month tariff impacts for April and then May. Now that the remaining 10-month impact should drag their operating profit guidance from the May's 3.8 trillion, but fundamentally, their business is going very, very strong. The sales in Japan, US, and then even in China, Toyota is doing very well. So the business fundamental is, I think it's better than they originally expected. And then also, it's Toyota's nature. They always give us very conservative numbers. So given those things combined, I think Toyota is able to keep the original guidance, despite the 10-month additional tariff impact is added.
Bloomberg Intelligence Senior Analyst Hatsuo Yoshida there, looking ahead to Toyota's numbers and going through the revised numbers for Honda as well. We do have more ahead on the Asia trade. This is Bloomberg. Shares of AMD fell in after hours trading in New York as investors reacted to President Trump's proposal for a 100% tariff on chip imports as part of its quarterly earnings report. The chipmaker also offered little clarity on when it might resume sales of key AI chips to China. CEO Lisa Su told Bloomberg that she is optimistic, though, about a progress towards a resolution.
I know people always want precision, and what I will give you is exactly how things are playing out from our standpoint. I think we've seen an improvement over the last 90 days. 90 days ago, we did not expect to be able to ship to China because of some of the regulations. I think this administration, the Department of Commerce, the government has actually been very open to trying to find the right balance between national security and ensuring that we have U.S. AI technologies proliferated across the world. So we think that's a great balance. We now know that we have a number of licenses that are under review. We've been given good indications that those are moving through the review process. And we will certainly inform everyone when the licenses are granted. But given that it's hard to predict exact timing, just given all of the things that are in front of the government at the moment, we thought the right thing to do right now is just say, hey, let's not include that in the third quarter revenue. But even with that, we're growing 28% year over year, which is, fantastic growth rate. And if you asked me, what we've learned in the last 90 days, we've learned that the demand is even stronger in the second half of the year than we necessarily, thought maybe just a few months ago.
And analysts really corroborated and thought it was right that we should see such caution perhaps and not show up in the numbers. But Lisa, I'm interested in the inventory that you had been very clear about, the $800 million knock on the fact that you couldn't access China for a while. I know that most of those manufacturing hadn't been complete, but do you think you can unwind that $800 million? How much do you think can you bring that back to bear?
Well, we certainly expect that once licenses are approved, that we will, restart our supply chain and, get those in place. We do have, a bit of time that it takes to complete those, but we would expect to be able, to ship some of those products as licenses are approved. And, again, the exact timing will depend on when licenses are approved. But I, again, would hope that we don't get caught up in, something that I would say is moving actually in the right direction. And really see the overall business is doing extremely well.
AMD CEO Lisa Su there speaking with our colleague Caroline Hyde. Take a look at what we're watching as we head into trading across Greater China, and also US futures continue to hold up even as we see these ongoing trade and tariff developments. The threat of 100% tariffs on chips, for example, not really playing out too much, particularly even when it comes to some of these chip names already trading. Certainly Samsung is shrugging off that threat, but we're watching TSMC in particular when we get trading underway in Taiwan. TAIEX futures at the moment up by 1.3%. We're also watching Chinese assets today in light of what is expected to be resilient trade data.